Good afternoon and welcome to NYFP. Earnings season is winding down and we will be taking a closer look at what we're seeing. Joining me now is Brian Barnier of ValueBridge Advisors. Good afternoon, Brian. Thank you so much for joining me.
Pleasure to be here.
Well, we've been getting some mixed economic indicators out there, so what are some trends that you've been seeing?
What we're looking at in the earnings season so far, again, this is preliminary, but our sales are not quite as strong as we'd like. We were off significantly last quarter. We're down a little bit now. We've got a few more reporters coming in. The thing that we're looking at is sort of how do the sales to price are working out right now, and in there we see some split within the S&P 500 categories. So for example, we see the consumer discretionary, we see industrials, we see IT doing better, finance is not quite coming back where we want it to be, and overall it's kind of flat, and that's scary up on the top sales line.
And Brian, you brought up sales, so where are you seeing the growth right now?
When we're looking at the growth pieces that are coming in, everybody's got to work off that very stagnant sales number. So what's doing well is that cash flow is swinging up a little bit while gross margins and GAAP margins are both under pressure. The cash flow piece is helping the quick ratio, but the key question is whether or not what's happening there is really cost cutting that's not very good, or people feeling confident and that's why they're pulling up more cash.
And in terms of margins, what are some of the details and what are they telling you right now?
So when we look underneath those pieces, now we're trying to see what's the sort of message behind the numbers. And the piece that's most concerning to us is when we look at those cost compressions, it allows us to jump into the big economic picture of sales over the labor productivity ratio. And what we're seeing now, going back to 97 or 2001, depending upon where you call the turning point, is that that's on a down line, which means that as we're getting more labor productivity, that's not going back into hiring more people. That just cash is coming off the table, which means less cash into people's pockets, which means that just goes back around into lower sales. And that's not a good spiral to be in at all.
And Brian, you brought up a lot of important points there. We know what the Federal Reserve is watching in terms of indicators, but what are some other indicators that you're watching out for?
So one of the things that's very important to us is that sales to price ratio, because the PE is just really broken. The P part is all distorted by the inflations of the monetary policy, and the E piece, the earnings, that's distorted by all the earnings engineering that's going on, because EPS is way out of whack with the actual sales number. So instead, look at your price to sales ratio, look at cash flow, and then it becomes a very company sector specific thing to look who's doing real general growth. Remember, buying businesses, not just trading.
Brian, a lot of very important points there, so thank you so much for your analysis, especially when earnings season is winding down. Thank you very much.
Most welcome.